The index really hasn't gone anywhere over the past month, but that's a much different story under the hood. A chart of the S&P 500. If you look at the S&P 500, we have been in a pretty tight range for a couple months now. We tested that level a few times and about 6,800 on the downside. I mean, right now, the S&P is only 2% off its high. The index really hasn't gone anywhere over the past month, but that's a much different story under the hood. That number over the past month again has jumped to, I think it was 11 or 10.8%, so almost 11%. Again, the index is going nowhere, but you're seeing just these sharp moves under the hood in both directions. So this is stocks going, could be moving higher or lower. But the interesting thing is that when you see these spikes, this tends to happen during crisis periods. I mean, you got close to that level around the sell-off during the pandemic. The last time you were there was during the great financial crisis. And then here's a cluster of readings heading into the internet bubble bursting. So I think if you are set on being a buy and hold investor with a lot of your capital tied up in the S&P 500 and via SPY or QQQ, I think you are facing a very significant risk of capital impairment over the next couple years, facing some pretty sizable drawdown risk.